What's up, YouTube? Welcome back to another video. And in this video, we're going to be talking about how to use momentum and how you can use momentum as extra confirmation when you're looking at entries for your order blocks and all types of other things, right? I don't think a lot of people really focus on momentum a lot. Now, it's not something that you technically like need 100% when you're trading or whatever, but it's an extra confirmation and you don't really have to do anything to determine what momentum is. You really just have to look at the charts and just see what the candlesticks are providing and stuff like that. So it's an easier way to determine where price and where the market wants to go without actually having to do nothing. You're just using your eyes. All right, you're just using your eyes to determine, just to see where the price is going to go, right? Because just using your eyes, you can see a lot of things in the market without actually having to go in, right? So like a quick example, if I go ahead and remove all of this drawing I have here, I can tell that most likely than not, sellers are taking over this market. How can I tell that, right? Well, when you look at buying versus selling, it kind of put the charts back in. But when you look at buying versus the selling pressure, you can see what type of institution or what type of side the market is going towards. We're going towards the downside versus the upside. You see how slow we take to go towards the upside, but as soon as we sell, we have these long impulsive moves. That is some sign of momentum. That is basically what momentum is. Momentum is more favorable to the downside than it is to the upside. Okay, you can see it right here, right? If I zoom in a little bit, we talk about right here, right? Look how the market is selling towards the downside, You see how these big long candles right here towards the downside, and then you see how much price struggled to go back towards the upside, right? Just looking at the candles alone, you could tell that this market was going to fall. So even if like this didn't happen, right? By seeing this, you can kind of assume that, okay, most likely than not, the market is going to continue towards the downside, or we're going to have another long impulsive move to the downside. Why? Because look how much buyers are struggling to get inside this market, right? Look how much buyers are, it's difficult for the buyers to buy this market because no buyers are trying to buy this market. That's basically what I'm saying here. Buyers are not interested in this market right here because you see how the candlesticks are not representing any buyers, right? You see how we have a long impulsive move to the downside, right? Slow movement towards the upside, indicating that buyers are not interested in this. And look what happens after this, right? Look what happens after this small movement towards the upside. Huge sells, right? So you can also tell that the sellers here, right, are not as strong as the sellers here. Why? Because you see that the price started to slow down a little bit, right? You see buyers started to get back into the market, and then price started moving down to the downside, but it's not as strong and violent as it is up here, right? There's more bearish momentum, there's more bearish pressure up here than it is down here. Why? Because price is already sold off, right? The market's already sold off. So there's not going to be a lot of people selling the market here as much as there was people selling the market here, if you understand what I'm saying, right? So of course, you're going to have sellers enter the market here. You can have sellers enter the market here, but it's not as strong as it was here. Okay, so and you have another case and you have another example right here. We have a redistribution. You can see how sellers took over the market again, right? You see we have impulse move to the upside, impulse move to the downside, right? You see how we're struggling to buy back towards the upside, and look what happens afterwards. Big selling pressure to the downside, right? So I mean, it's just like an extra thing that you can look at to really just see where the market is going, right? See where the direction this market is going, everything like that. So how can you use this when it comes to order blocks and entries and things like that? Well, I mean, we're gonna have to go in and explain. But before I go into that, right? If you guys are interested in joining the Discord, there's a link in the description. You can enter the Discord. It's a one-time price. We have our mentorship in there if you want to learn, more in-depth information, right? Because I do share information on here, but the more in-depth stuff and the more like, but yeah, the more in-depth stuff is for the mentorship and everyone like that. So if you're interested in that, link in the description. If you have any questions, you have any comments, concerns, or whatever that you want to talk to me about, whether it be on the YouTube channel or whether it be from the Discord, right? You can just hit me up personally, right? You have my Discord, or you could just email me. You could Telegram me. So that there are a lot of different ways that you can contact me. All right, so one-on-one sessions, right? They're free for the Discord members. Those are in the mentorship. They're free for you, right? But for people that's not, I still do one-on-one sessions for people that's not in the Discord. But there's a small fee for that, like I said before, and that's pretty much it. All right, so guys, now we have this little scenario right here that I set up. We have some structure going on. We have order block right here that is formed. We have the market moving up. All right, so here's gonna be our area that we're gonna buy from. Right, we're gonna buy off the OB. Let me make this another color. All right, guys, you know the most common confirmation for order blocks is that you want to see an impulsive move away from the OB. Why do you want to see impulsive move? Because the impulsive move shows you that momentum is favoring towards the upside, and when you see momentum is favoring towards the upside, that's basically telling you that buyers are interested in this market, right? Buyers are buying from here because once you have this OB goes to the downside and then you have this surge of price towards the upside, that tells you that buyers got into the market, institutions bought the market here, and now you have this effect from the buyers buying here. You have this impulsive move towards the upside, right? That's essentially how we're using momentum. Now, once the market starts to retrace to, you know, come back and test your OB, and usually this will be your entry, right? If you're taking a simple risk entry, right? Don't mind the the stop loss here, right? So if you're taking a simple risk entry, you just have a limit set on here. Well, if you're taking a, you know, a confirmation entry, you'd wait for lower times inside of here, right? But how does momentum play into this, right? So we have momentum going towards the upside. We have this big impulsive move towards the upside. When the market starts coming back down, this is exactly what you want to see. You want to see the market start slowly making its way down. Why? Because you want to see that sellers are not interested in the market, right? So I'm going to use this right here. You want to see that sellers are not interested in the market. So you want to see this kind of choppy price action towards the downside like this. So when the market taps inside of here, we get a change like this. So when the market gets down here, you want to see the market give this change of character. So now we'll return back towards the upside, right? You want to see this slow price action. Now it doesn't have to be this slow, but you don't want it to kind of be faster or match this this impulsive move, right? You want it to be slower. You want to take more time than this one. Why? Because that shows you a less interest of sellers, right? That shows you sellers are not interested. They're not interested. So once we get back to this area, you're going to see a surge in price again, and the market's going to fly back towards the upside. Okay. Now, one thing that I see with momentum is sometimes you get something like this, right? The market will do this and then fly towards the downside. Sometimes this will work out and the market will just go back to the upside. This will be a big manipulation. But most of the time, what you'll see is if the market goes up, right? If the market gives you this impulsive move towards the upside, and now we're coming back down to test this sponsor candle. All right, we'll come back down to test this sponsor candle, order block, whatever you want to call it, right? If the market does something like this, we have this big impulsive move, you're going to see something like this. Now you don't know if institutions just sold the market from over here, right? And now they're not interested in buying the market here no more. So basically this was just a buy to sell, right? Especially exactly what happened on EU. And we're going to show that in a minute, right? So this is what could happen. Okay. And this is why we want to see this happen. This is why we want to see this happen. We want to see this happen. We want to see that slow price action down because we want to see that institutions and sellers are not interested in selling this, right? So when we come down here, we're going to see this big surge up, right? So this is basically how it is, right? That's a simple way of looking at it. It's that simple. So now I'm going to go in EU and show you exactly what I was talking about. All right, we're going to, okay. So let's look at this, right? This is exactly what I was talking about. So in EU, you have this clear order block right here, right? And I know a lot of people probably was trying to buy from this order block to, you know, continue EU towards the upside. Okay, well, look what happened. Momentum, right? Even though, look, we do have this buying pressure here. So, you know, institutions were, of course, buying here. I know because there was lower time frame accumulations down here that I was trying to get into, right? So we have this big buying pressure towards the upside, but look what happened after. Sellers matched it, right? And this is exactly what happens when you have this impulsive move towards the downside from sellers, right? They're going to invalidate these buyers. Why? Because these sellers are stronger than these buyers. That's basically what it's telling me, right? When you have this impulsive move back down, these buyers are not strong enough to continue buying this. So if this order block right here was to be a, you know, a good confirmation, or let's say we was going to buy from this order block, and I was looking to buy from that order block too, Okay, I was looking to buy from this order block too, but I was gonna wait for lower time frame confirmations. But as soon as I seen that we had these big impulsive candles coming down here, I was not becoming interested in this anymore. Why? Because this is what you want to see. Instead of seeing this, I would have been more interested if the market did something like this, right? If we did something like this, if we had this going on, right? But we didn't have that going on, right? We had, I mean, you guys seen it. We had that happen, okay? So that's just to show you that, you know, when you're looking at these sponsor candles, you're looking at these order blocks, just be careful and watch to see how the market is approaching it. It's always look to see how the market is approaching your area of interest, your, you know, your order block, your sponsor candle, your point of interest. Look to see how the market is approaching it. If it's approaching that area with, you know, some high volatility and some impulsive movements, most likely now that area might get invalidated, right? It won't happen all the time, right? You could have this scenario where let's say this came down, but then we reacted off of it, right? That could be a huge manipulation, and the market could have just did that. But most of the time, when you have, you know, high impulsive moves towards your point of interest, or especially a sponsor candle, most of the time it's going to get invalidated. Remember, not every sponsor candle, not every order block is going to hold, right? This order block right here was just a temporary thing. All they wanted to do was buy the market here, take out this liquidity, and move to the downside. Now, easier way to avoid this, because low-key I kind of knew this was going to fail because there was liquidity up here. So you know how the market likes to grab liquidity. Impulsive move, grab all the sellers here, all the stop losses, all the buy stops, whatever it was that was up here, and then what? Drive it back to the downside. So this was an obvious kind of thing that was going on here. This was an obvious manipulation, but there was a potential that we could have bought from here. So I was still looking at that potential, but it didn't happen, right? So that's just an example of how these momentum, right? Momentum is pretty simple. It's a pretty simple concept, but like a better setup I could show you is, let me see if I can find one in the group that I recently posted. Okay, so this was actually one of my students that I was talking to a while ago, but here's an example that I sent him when I was talking about momentum. Okay, so you see how the market, you know, completely sold off, right? We completely sold off. So now we can see that high volatility. You can see that high impulsive move to the downside, right? We can obviously tell that sellers are taking control of this market from this area towards the downside. Right now, once the market gets down here, we see that start to slow down. We see it starts to slow down, right? Okay, we have sellers come back in again, but then look at this. Look what happens. We have a change of character, right? The market accumulates here. We have buyers come in here. We take out liquidity, and look what happened. It surges towards the upside, right? We have this surge towards the upside. You see these three long buy candles towards the upside. Now, look how the market reacts after we finish making this break of structure, right? Look how slow and choppy the price session is towards the downside, right? When we're coming back to test this sponsor candle here, look how slow and choppy. This is the momentum that you want to see when you're, this is the type of momentum that you want to see when the market is approaching your order block / sponsor candle. And after we tap into this, you see how momentum, you see how the buyers come right back in here and buy and surge towards the upside. This is exactly what you want to see. This is like the prime example that I kind of wanted to show you guys. I hope that helped you guys out a little bit. If you want to join the Discord, you can contact me. The link is in the description. If you want to ask me any questions or anything like that, you can contact me, right? One-on-one sessions, they're below. Instagram, it's in the description. It's the same thing as the channel name, Z Snipes. All right, so if you have any, you know, video suggestions or any questions that you want me to make a video on, let me know, and I'll work to make a video on that. So I'll see you guys in the next video. Peace out.